Thank you for your patience. We are very pleased to see such a full house. I know we've still got a few more seats for those that will be rushing in later. We will identify them and we'll clap for them. But anyhow, thank you very much. We would just like to give you a brief idea of what the program is. So we're going to start off with our Auditor General presenting. We will then have a response, and thereafter Professor Soko and our two guests will take a seat, have a conversation, and then it will also be open to you for your questions. For those of you that enjoy being on social media, we hope that you will join us there at UCT GSB, and then also at Auditor Gen, just GEN_SA. We're using the hashtags tonight of GSB Connect and hashtag AG Report. So we'd love to hear what you've got to say. It now gives me great pleasure to hand over to Associate Professor Soko, Director of GSB.
Pamela, good evening, everyone. Welcome to UCT GSB. We are very delighted this evening to host a very dear friend, the Auditor General, Mr. Kimi Makwetu. I'm particularly excited because the last time I saw him is when we were throwing stones on the main campus in the 1980s. And I'm very pleased that he has agreed to come and present this important report, which was launched on the 1st of November, a report titled Accountability for Government Spending from the Plan to the People, unpacking the audit outcomes and highlighting key findings from the 2016-17 Consolidated General Report. I'm also excited to welcome a colleague, Dr. Andrew Siedel, who is associated with the GSB. He has taught here at the GSB, and he did his PhD here at the GSB. Let me briefly introduce Mr. Makwetu. Temegile Kimi Makwetu was born in Cape Town and completed a social sciences degree at the University of Cape Town in 1989. He received a BCom honors degree from the University of Natal and is a qualified chartered accountant. He started his career with Standard Bank and later worked at NAMPEC. He completed his articles at Deloitte, where he progressed to senior management before joining Liberty and Metropolitan Life in Cape Town. He moved to Gauteng in 2003, where he worked at Liberty Life, and he returned to Deloitte as a director in the firm's forensic unit before his appointment as Deputy Auditor General at the Auditor General of South Africa. Kimi is married and has 3 children. On the 1st of December 2013, the President of the Republic of South Africa, Mr. Jacob Zuma, officially appointed Kimi as the new Auditor General of South Africa for a period of 7 years. Let us welcome him, ladies and gentlemen. And before you start, let me introduce Dr. Siedel. Andrew Siedel divides his time between consulting and academic activities. He consults independently on a range of issues, including public governance, public finance, democratic decentralization, capacitation, and systems development for government institutions, international organizations, research institutions, and advisory firms. In the academic role, he's a part-time senior lecturer at the University of Cape Town, where he lectures on public sector structures and functions in the postgraduate diploma in public sector accounting program at the College of Accounting. He's also a guest lecturer here at the UCT GSB. He has been admitted as an attorney of the High Court of South Africa and practiced as such for several years, after which he entered the corporate world and then worked for a development finance institution before commencing his current activities. Welcome, Andrew. And now I invite the Auditor General to present his report, whereafter Andrew will respond, and then we'll have a discussion in the plenary. Welcome.
Is this thing on? Yes. Oh. Good afternoon. Thanks very much, Professor Soko. I had to practice this part. the Professor Soko part. Because I don't know you for Professor Soko, I know you as Mills. So I will tactically refer you as Mills during the course of the discussion today. Ladies and gentlemen, thank you very much for allowing us, the Audit Office of South Africa, to share some insights on the work that we do every year. This work, no doubt, is work that directly affects all of us at a personal level. But also it affects the institutions that are supposed to do things for all of us, whether we are in business, whether we are in private life, but these are all resources that we report on which are aimed at creating that opportunity for people to make a success of their economic plans, but also their other plans. So when we report on the financial statements and we look at the financial statements from the Audit Office, we are not necessarily just informed by the technical nuances of debits and credits and where to put accounts in whatever form. We are also informed by the fact that the Constitution requires us to do this work, and it insists that every amount of money spent in the public institutions must be audited by the Auditor General of South Africa, which means that the national departments and provincial departments and municipalities are all every year subjected to a process of an audit by our office. Right. So, this is the message that we have been sharing with the people that do the management and the leading in government. We said to them that there's nothing that is going to get you to get better at managing public finances unless you insist on the centrality of accountability. Now, what we are saying here is that in order for finances in the state to improve, there ought to be accountability at the center of it all. Nobody must be allowed to carry out activities of the state without having to account to somebody, or without having to account for the things that have been done with that money. So that is the central theme that has been driving our message in the last 2 years, including this one. That there is no doubt that if you are going to be given billions of rands through the fiscus, and you are left to your own devices without the necessary accountability systems, the system will fail, and the system will never know who is responsible for not delivering the things that ought to be delivered. Yeah, right. Now, let's talk about this picture. This is the picture that we paint every year, which gives an indication of how finances in the state have been spent. And in this instance, we are focusing on the national departments, and we are also focusing on the provinces because they are all subjected to the same financial year, which is the end of March. Now, the summary of this report suggests that if you look at the green, which is according to the language that we use in reporting on financial statements, are those institutions and entities that were found to have applied themselves and adhered to all the policies and procedures when it comes to financial management matters. If it had to do with transparently reporting on the finances, they've done it well. That's the green. And the number that you are seeing there in brackets is the number of departments and provincial departments across all the 9 provinces. I will show a slide now which shows how each of the provinces fared. But in total, we were responsible for about 422 sets of financial statements on which we had to sign on. Of those, just about 30% in the current year achieved what we refer to as an unqualified with no findings. And there are 3 elements that we often test. The one element is whether you do have the necessary disciplines and processes in place to record the finances in your care. If you're going to put money out and you're going to build 50 houses, you've got to account for it in the books. And there are certain prescribed rules that are set by National Treasury as to how to account for it because they are the custodian of the fiscus. The second point that we also evaluate is whether in spending this money, have you transparently reported on the things that you claim to have achieved with it? Because in their annual reports, they must also report on the predetermined objectives that they had to achieve while they were spending all of these monies under their care. And the third point, because it is financials of the state, it also comes out as a result of specific legislation and laws that govern how these finances must be managed. So when we look at the financial statements of every entity, we often focus on those three areas. The transparent reporting in terms of the debits and the credits, and the fact that you've managed this money and it's still there, and you can see it also how it's been recorded in the books. But also you want to check whether you didn't go and buy a sedan vehicle when the budget was for you to buy a truck in order to do refuse removal in a municipality. Have you recorded that? Is there sufficient evidence to suggest that you've got reliable systems to account for that part of it? Because it's not your money. You can't just spend and say, well, I spent because it was in the budget. You want to see what did you buy. And the third thing also is the compliance with legislation. And the big one here has to do with supply chain, because we will all appreciate if you look at the 1.3 trillion that is in the budget, if you take out the finance cost for debt, you're probably going to also take out the employment cost of all the people who are employed in the state. A significant portion of what is left is going towards procurement. Because they must procure things for defense, they must procure things for education, they must procure things for health, they must procure things for social services, they must procure for social grants, they must procure for water. All of those things must be procured out of these billions of expenditure which are left after they've paid salaries. So our orientation and our bias when we look at issues of compliance, we want to see whether they have applied themselves in accordance with Section 217 of the Constitution, which prescribes that all monies that are spent towards procuring goods and services must be done in a manner that is transparent, that is cost-effective, and that is economical to the state. So those are the three elements that are significant if you look at the stuff that we report on in financial statements. To be fair, it's very easy to be unqualified. It's very easy. It's a no-brainer. Because the auditor comes to you at the end of the year and say, that 250,000 that you've debited to account such is incorrectly accounted for, please adjust. If you are a chief financial officer that is reasonable enough, you are going to adjust and you are going to escape a potential qualification and become unqualified. So to us, that's not the test, because you can correct it at the year end and get someone to be unqualified. Unless they do not have the documentation to show what transaction it is, then they probably will get confused forever. So the two things here, I think, which are important and are central to what happens to this money is not so much that technical rigor. Put a debit here, put a credit here. If it's wrong, put it out and put it somewhere else. That's fine. But the issue is, how did you procure with government finances? Because you could have been procuring from somebody with whom you are in partnership if the issue of conflict of interest is not properly managed. Which means that we could pay to hire this class, as you may have seen in the past, 250 rand instead of 120 rand for a function. That's where the risk is. Because that's where you are going to start paying for things that are not worth what you received. And so if you look at these categories, the green guys are the guys that are really performing well in terms of departments, in terms of provinces. You come to the yellow guys are the guys that are unqualified. But if you look at the level of irregular expenditure that is reported in their financial statements, even though they are unqualified, but they have done things that are not acceptable in terms of transparent management of procurement, some of them. They did not comply with the rules when it comes to the procurement of goods and services, and we annotate that as irregular expenditure. It is expenditure incurred, but in ways that are irregular and expose the state to unnecessary costs in certain instances. But as far as the debits and the credits, those guys that are yellow are fine. So you can see there's a significant portion of them, if you add the yellow and the green, that have passed the test as far as the financial statement side of it is concerned, the debits and the credits. But the differentiator is the fact that the guys who are yellow could hide there permanently. Because if I'm a municipal manager in a municipality and I get unqualified accounts and I run a fleet of vehicles in this particular municipality, but all of them are instructed to go and do maintenance and repairs and fuel at a particular service station, which is sometimes owned by the mayor. So there could be invoices that get processed in the books, nobody knows about, but there was never any delivery of fuel for those vehicles, but payments get made. That's what we are trying to guard against here, to make sure that we deal with the issue of supply chain, because if you do supply chain and you buy from someone with whom you've got a shareholding interest, you probably won't even mind paying 3 times the price in some instances. And then the people will be the qualified guys. They tried very hard to do the right thing, but many of them do not know how to, but do not admit. There's sometimes where you've got people who are handling financial management activity in municipalities and departments, but do not have the necessary technical skills and competencies to carry out the work. That's the bulk of what you will find here. And the staff that gets qualified will be predominantly the asset management side of things, the management of expenditure. All of those areas that are vulnerable to abuse when it comes to financial management are predominantly in the space where the departments are in the purple and the red zone. And the red zone is the disclaimers. That's only when auditors have come, they've tried everything, these guys are none the wiser. They've got absolutely no idea what it is that they are supposed to report, either because during the month, during the year, during the quarter, there was never a need for them to report to anybody. So they are running around looking for consultants to help them put together a set of financial statements, but they don't have supporting documentation to justify the journal entries that they propose must be processed. But the mess, at least, is starting to disappear. If one looks at the picture over the last 4 years, it has not grown, but I think we're getting to a point where now what is emerging is pushbacks, in essence, where those that have been put to the task are now starting to say, hang on, it hurts now for me to sit with this irregular expenditure. Let's get into the boxing ring and do some fighting about it. So that's what happens here. And some of them are genuine cases where people feel that, well, there is issue of interpretation of a particular provision in a contract which they believe means A, and in our independent assessment as auditors, we think it means B. And then we stick it out. And then we say, well, if you say it's A, then you're not signing. And then we bring somebody who's got an independent mind to interpret what it should be. Ultimately, we settle those matters. But we've got that issue in the audit as well. We welcome parts of it because it's important that the person being audited is responsive to the issues that are raised in an audit, rather than ignore them, hoping that in an absence of consequences, nothing will happen. And here's the picture for the provinces. If you compare the different year, this year and the last year for each of the provinces, these are the departments as well. If you look at the departments in the country, on average, every province has got somewhere around, say, 12, 13 departments. So the outcomes of each of these provinces are the outcomes of the departments in those provinces. It could be the Department of the Provincial, Department of Education in the Western Cape, the Department of Agriculture, Social Development, all of those departments that you see replicated in different provinces. These are their accounts, and this is how they fed. You can see the performance down to province in terms of the different, these are the numbers of institutions audited in each of the provinces. For example, the Western Cape would show that picture. So you also get a sense in terms of what is happening in each of the provinces, because there we go more deeper, and we start looking at some of the delivery of the programs that they have committed to in respect of the monies that are spent and monies that are audited per the financial statements. So the picture does look a little lousy in certain places. If you look here, where there's a dominance of these provinces. And I'm sure when you think about it and you start comparing those provinces quietly, you probably come to some conclusions about what it means to you. It may mean something else to us, but it might mean something else to you. But here's the picture. One of the things that we've also examined, in addition to the reporting discipline for financial statements, was to look at the financial health risks. Because there are two things that we believe could cause any institution to battle. One is the absence of disciplines of internal control, which is what I showed earlier on in terms of those outcomes by province. Those that are in the yellow, in the purple, and in the red are a demonstration of a serious lack of disciplines of internal control. Meaning that it is easy for some people in certain institutions, if they know that the person who is the chief information officer does not necessarily possess the technical skills and knowledge to manage the general computer controls environment, for example. And they know that if they went and checked on the little laptops that are left in the office, they'll possibly find a piece of paper that shows somebody's date of birth. And sometimes they manage to get into the system through those means because there are no strong disciplines to protect access into the systems. Somebody succeeds and they set up a payment for an electronic funds transfer without documentation. Those payments can be processed and go through the bank in the absence of account reconciliations in the institution. The chances are that you'll only figure out those issues at the end of the year when you are trying to prepare financial statements. So we are saying here that the combination of the absence of disciplines of internal control and the fact that monies get spent in supply chain without proper planning sometimes contributes to a higher risk of financial health in the different institutions. So this slide here and this map is showing the level of financial health risk. You can see there in the Free State, there's a huge risk of entities in that province no longer having the money available to pay for goods and services when they become due. And the elements that we look at here is situations where now they are starting to write in red ink on their income statements, if you like. Slowing down of revenue generation, but building up of expenditures over a period of time, even some that are not budgeted. The collection of money is owing, slowing down, and delays in payments to creditors, meaning that some of the suppliers that supply goods and services sometimes walk away from site when they were busy with an implementation of an infrastructure program because the payments aren't coming through. They can't pay their labor, they can't buy other materials to continue on the contract. So these are big risks, and many of them are exacerbated by the lack of your proactive internal controls to make sure that there's project management and there are also routines that are in place to assist the institution to understand what is happening to the money at all times. So that is the extent of the financial health risk that we've observed. And you can see that in some provinces you can still breathe, but certainly the Free State stands out as one of those that will probably come forth and say, can we please have more money? Now, here's the issue of irregular expenditure. Let me just at the outset say, at the time that we conclude on the audits, this is at the point where we've said, you are supposed to procure that particular item in accordance with these guidelines because it is, for example, a 10 million procurement. Can we see the bid evaluation committee, the bid adjudication committee evidence of this procurement having been carried out in accordance with your policies? In the absence of that evidence, we then call it irregular until you demonstrate that you have subjected that supply chain management process to a transparent and independent process. Sometimes they don't call for bids. They will go in and call for a bid for 200,000, but before you know it, when the contract is complete, it's already sitting at about 7, 10 million in certain instances because there are extensions of that particular contract that get done without supply chain management processes being followed. So all of those items fall foul of irregular expenditure. Irregular in the sense that the rules prescribe that you shall do this when you procure, but you've decided to do it your way. And the way that you've done it is not transparent. Nobody knows what was the best deal. In order to achieve those objectives of Section 195 of the Constitution, which call for effective, efficient, and economic use of public resources. No one can know that. That's why in some instances, in places like public works, you have found instances where the hiring of a class is a ridiculous amount, because nobody goes through a process. Everything becomes an emergency. So the level of irregular expenditure is escalating, and the reason it is escalating is because the people who are assigned the responsibility, whether it is the accounting officers or the executive authorities, do not insist on action being taken when these matters arise. Now, in an environment that tolerates low level of performance without consequence, the chances are that what used to be the high standard becomes a low standard. Everybody knows that I can put out an order book and order a particular set of stationery for a particular district. If I go and get it from Shamodin, who is the supplier, who is known to me, no one is going to come ask me the question why I paid 2 million rands when the stuff that I bought is about 500,000. That's the issue here with irregular expenditure. The fact that there's no transparency in how the transactions are carried out creates an environment where you could potentially pay a lot more than you ought to pay. There are also instances that get into this area of expenditure where payments, big amounts of money are paid in advance, but the receipt of the requisite goods is still somewhere around 20% delivered, even after a year. The cash has left the bank. That which was intended to be bought is not yet there, or is not there at all, but the money was made. The debit is sitting somewhere in an account, but when you ask for, okay, where is this particular deliverable that was meant to be in place? And sometimes it's supposed to be a building. And some of our guys go there and they find, but there's no building there, but there's a big debit in the books. So that's what has triggered us to call for Parliament to review our powers as an audit office, and I'll deal with that at a later stage in terms of how we want to get involved from an audit point of view with the follow-up mechanisms to address this particular matter. Because this is a combination of things. It could be that there are people who have no idea about how to apply themselves in supply chain because they were put into a position as a CFO. But the idea was never for them to write the books. The idea for some was to run supply chain projects. So if you get someone who was a treasurer or one of those things, if you become a treasurer in a branch, and then you probably are the closest in understanding the debits and the credits among the people in that particular locality. And then you get pulled in, and then you get a 850,000 annual package, right in the deep rural countryside towns. Now the chances are that you are not going to push back on a number of transactions that come your way, either because you don't know, secondly, you are scared. There's no other alternative of 850 around town. The further away you move from here, the less prospects there are for you to get a similar job. So it becomes a situation where irregular expenditure gets tolerated because there are all sorts of things in the system, including incompetent people who are carrying out transactions they do not have an idea about. Until such time that those that are charged with governance investigate it. Only then will we know who was behind it and whether it was ill intent or whether it was just a case of somebody not executing work competently. We do not know that yet, but we can know it if this thing gets investigated. I'll skip that. These are just a couple of things. I just wanted to come to these projects. In addition to looking at the finances and the effectiveness with which the finances are handled and how normal transactioning gets done, we also looked at a couple of programs in a document called the Estimates of National Expenditure document. It's a document that gets released by National Treasury every year, which sets out by vote. Each one of the votes where monies have been appropriated has got a set of programs that they say they are committing to delivering. They are in a public document that's referred. The Minister of Finance often refers to that document every year. So what we do here, we look at how have you fared in dealing with the targets that you met in respect, you set in respect of the different projects that you are going to be using this money for. So in this particular financial year, one of them was the water infrastructure development under water and sanitation vote, to look specifically at that program. How have they performed in delivering water infrastructure? Because some of it is done in rural areas and municipalities. There's a joint arrangement between the sanitation and water department and municipalities and other agencies. And the other one is about the school infrastructure for basic education. If you remember some of the targets that were set, they were to do with eliminating mud schools in certain areas. So there was a huge budget that was put in the medium-term expenditure process to finance school infrastructure. Some interesting insights that we have come up with. I think it won't be fair to try and get into the detail of those. That report that we have released, which we are talking to now, is a public document. You can access it, and I'm sure the colleagues from the office can assist you. Just to go and read some of the issues that are inefficient in the execution of the delivery of programs. Now, this is in addition to the stuff that doesn't work well in the finance department. But there's also another dependency here, because the people who drive the delivery of these programs, the guys in finance are also dependent on them to be able to do the right thing in terms of translating it into the accounting records. So here you find situations where levels of monitoring and oversight over projects becomes a nightmare. What was meant to be a 90 million project becomes 200 million or more. What was meant to have been finished 6 months ago is still work in progress and has possibly been abandoned. There's a mixture of them, which point to the fact that not only is it about accounting for it in the accounting records, but part of it is in the execution of the delivery of the programs that are required to be paid for with their voted funds. Some findings in terms of the achievement of targets. This is just a high-level reflection on those 5 programs in terms of the levels of achievement of the targets that were set according to what was budgeted as well as what was delivered. A lot of the detail there, we just summarize the issues here, but I won't go through much detail, except to say that there are many opportunities that are missed. If that school is not put in place, the chances are that as the fiscal pressures multiply, the chances are that in the subsequent years there will be no space for a similar amount of money to be committed for that particular school. So what gets missed now is probably going to be missed for many years, and it has its own devastating consequences in terms of what was meant to have been achieved with those monies. I won't go into that. And so the issue is that there's a big issue in terms of how these finances are managed. And I'm sure some of us will see these things. There are many times where, if you look at the expanded public works program, where you drive around in the rural areas, almost without fail, the people that are part of these expanded work programs, they are always there, but they're always sitting and chatting most of the time. It doesn't matter which part of the villages you go to. Fortunately, I was there last week, and you can see that this is part of stuff that's being done for job creation, but there's no supervision to make sure that that which is being paid for is happening. And it's widespread in a number of areas. It's almost like a social grant if you look at the expanded public works program. The way it works, honestly. You know, you drive and you think that maybe it was just an exception, the ones that you met about 10 kilometers away, right across the way. They're almost doing the same thing, you know. So you wonder, sometimes why do we not achieve the things that we said will be achieved? It's because nobody is monitoring and supervising what is being done. Basic disciplines. Some stuff on the water and sanitation. We did a performance audit on the water and sanitation last year, where we looked at the delivery of water infrastructure and some of the stuff that you believe maybe could have been avoided. Here's a municipality that spends something like 125 million rands to lay out the infrastructure right up to the reservoir. From sourcing the water, treating it in the treatment plant, and getting it right up to the reservoir. But in order now to get it out of the reservoir, there's got to be a reticulation budget that is put in place by the local municipality to be able to trigger the water from the reservoir into the taps and be able to supply the communities. But that municipality was not in the loop at the time when the budget was being put together for the delivery of that program. So everything got done up to the point where the municipality must kick in. Now the municipality can't act because they don't have a budget, but about 90% of the total budget has already been spent properly. Now everything is stuck because the municipality hasn't got a budget to put the reticulation system and connect the taps in the different villages so that people can drink water. The objective was not to spend the money and leave it at the reservoir. The objective was to deliver water. Water is no longer is not being delivered because the municipality did not respond to what was expected of it in terms of its budget to do that bit. That community sat without water for 2 years before the municipality could motivate for funds to be able to do reticulation. That's what happens. So it's not about money, somebody taking money and putting it in his pocket only. It's also about the impact of some of these things that confront us most of the time when we think that, well, we get the budget, we get told this is going to be 4.3% of this and that. So we start thinking in percentages and forget that the reality is some of these things are actually impacting directly on some people in terms of delivery and all that. And so we think that there's got to be some change here in how all of this thing is mobilized in the public sector. And we think part of the change is also going to be about advocating for the right steps to be taken through institutions like yourselves as GSB, but also to make sure that there is consequence for what happens. Because what happens sometimes can be described as just mere lack of procedures, but at the heart of it is the direct effect it has on many citizens. These are some of the things that we have started putting in place from our side as an audit institution. An intervention that we refer to as a key control intervention, where on a quarterly basis we go and do what we call a status of records review with those different entities that we audit, so that we can begin to prick their conscience and say, do you know this miscellaneous account that's sitting with a balance of 12 million? Do you know what it is before we get to the reporting stage? Have you got an idea what it is? Because we once found a situation in a municipality where they had a miscellaneous account. They were not reconciling their records. They were relying on the fact that there is some programmed activity on the system where you press 1. That 1 sends an instruction for debits and credits to happen, like it happens even in retail and elsewhere. But they don't reconcile their accounts. So here's this miscellaneous account building up. In the meantime, they say, well, this is just a balance, a sundry data. They want us to accept it as a sundry data in the balance sheet. We said, no, we can't accept that until you analyze it. What is it? What's there? So we started peeling and peeling. Then you started seeing things like 1 million exactly. You know those amounts? The stuff that frightens you when you see it as an auditor. You see an amount with zeros only. And it's worse when there are 6 zeros before the comma. You start getting worried, because things work in things like 256,492 rand 72 cents. Kind of, if you see a transaction like that in a ledger, then you're not so suspicious. But if you see 500,000 exactly, 1,500,000, 2 million, 1 million there, then you start getting, no. Things don't work like that. There's also 14% VAT that you must take into account. It can't give you zeros. It doesn't matter what amount you were paying for it. So the opportunity for people to conduct fraudulent activity is real. And that's why we've introduced this key control engagement to say, in order for you to realize your aspiration to achieve an unqualified with no findings opinion, you better make sure that you gear up in doing your reconciliations of all those 25 balance sheet accounts. Then you stand a better chance of getting a better audit outcome. Well, some of them, they like it, they embrace it, but some of them, they can see that this is an exercise that is going to get them in trouble because we pull these things out before the reporting day comes. And if they didn't do anything, we don't argue with them. We just tell them you are qualified because you know exactly that you didn't do the things you were meant to do. So this is part of a carrot that we have introduced in the system. And I must say that a lot of the accounting officers have really taken this on board because some of them are under pressure. They don't do this because they want to. Some of them do it because they are instructed to do it in a particular way. Now, of course, if there's a carrot, then it must also come with a stick so that people can wake up. So what we've done is we've gone to Parliament. After we released our audit report in 2016, Parliament said, this situation where you've got these negative audit outcomes year in and year out is unsustainable. Monies get lost, and nobody gets to explain these things to anyone. Let's look at whether we are going to review the powers of the audit office in order to enhance their ability to effect consequences in situations where we have not seen it up to now. So these powers that we have engaged our parliamentary committee on, it's a parliamentary committee that's made of all the representative parties in parliament, and it is basically what we call the Standing Committee on the Auditor General. So they are busy looking at the proposed amendments that we hope will surface in the House very soon. And it's about things like, if this entity in its financial statements ends up with an amount of 200 million of irregular expenditure, or it ends up with an irregular expenditure of 500 million, the Public Audit Act must be amended to allow the audit office to identify those matters and refer them for investigation to appropriate investigative agencies. So that you don't sit with this 500 million of irregular expenditure and hope that you're going to explain it away next year. Let an independent investigative body have a look at this, clear it if it's to be cleared, or find against somebody who is responsible for bringing it about. And that's what that part of the review of our powers is about. But it will get to a point once we get that report where we will also, another part of these powers is to allow us to raise a debt in the books of government on so-and-so who has been found to have been responsible for money going astray. That's the second power. So we will issue, like they do in Ghana. In Ghana, the Auditor General has got a power to issue a surcharge certificate. If there's a published price in National Treasury, I'm just using an example, and this bottle of water, according to what has been put into the database, is 20 rands. And because you bypass supply chain, you decide to go buy it from your friend or from your company for 50. Once that investigation comes back and it discovers that the price for this is meant to be 20 according to published prices, and you paid it for 50, the 30 rand is for your account. That's what that proposition says. It says the 30 rand difference is for your account. Because carrying out supply chain activity, you should have gone through the database where prices are published and pick up the price that will be an economic price already negotiated in the public sector. If you decide, because you may have a vested interest in that supplier, to pay 50 for each of these, and there are thousands of them that get consumed throughout the year, the difference must be yours, and that's what the Ghanaian office does. So once the Auditor General has signed off the accounts, they sit down with the team, do an analysis, check for those instances that will require a surcharge, and then they write a certificate. Mr. Andrew Donaldson, surcharge in your name for X amount, and whatever the issue is that has resulted in the decision to raise a surcharge in your name will be declared there, and then you've got 60 days to go and contest it in court. But you must pay within 60 days. That's what they do there in Ghana. We went and looked at this, and of course in other jurisdictions they've got different permutations of this, but it's almost something that's meant to drive people's attention to doing the right stuff. Because the incentive to do this for somebody else is also going to be low if you know that you're the one who is in the line of fire. You're going to have to think twice before you subject public funds to all sorts of things that could take it astray. That's enough for now. Niels? Yeah?
Okay, thank you.
Well, it's a tough job being a respondent. I've been furiously taking notes here. I hope I've managed to keep up. So just let's have a look at a few key points that were raised here and look briefly first at the overall outcomes reflected in the Auditor General's report. Now, as is pointed out, the consolidated audit report covers a range of national and provincial institutions. Local government is subject to a separate report. So here we're dealing with national departments, provincial departments, legislatures and public entities, including what we commonly refer to as state-owned enterprise and which have occupied the front headlines for quite a long time. Briefly, of the 169 national and provincial departments, only 47 or 28% obtained clean audits. Of those 47 departments with clean audits, 7 were provincial departments from Gauteng, 11 were provincial departments from the Western Cape, and only 13 national government departments, that's 13 of the 42 auditees in national government, actually made clean audits. Now, it might be a little bit of an embarrassment to note that the National Treasury wasn't amongst those 13, and in fact hasn't been for the past 5 years, but that's beside the point. Of the 253 public entities, 79 or 31% obtained clean audits. Looking at specific figures regarding expenditure, irregular expenditure, as you saw from the slides there, amounted to 45.596 billion rands. That's up from 29.413 last year. Unauthorized expenditure, 1.467 billion. That's up from 758 million last year. And here's the good news. Fruitless and wasteful expenditure amounted to a mere 1.23 billion. That's down from last year's 1.084. So we are actually doing well in some respects. If I can just digress for a moment, I mean, we talk about figures, we throw around numbers like 45 billion and all that kind of thing without really understanding what this means. In the classes which I lecture, I try to describe the enormity of this and say, R1 million certainly to a part-time lecturer is a hell of a lot of money. If you take your R1 million and you spend it at the rate of 10,000 a day, you'll have used it up in 100 days, or 3 months and 10 days. If you take R1 billion and you spend it at the same rate of 10,000 per day, I know my wife is listening, it'll take you 278 years to spend that R1 billion. Now imagine how long it's going to take to spend 45 billion rand. So just to give you some idea of the enormity of the figures that we're looking over here. Now the Auditor General very tactfully and diplomatically states that over the past 4 years there have been improvements in the audit outcomes, but certainly at a very slow rate. I'm sure, sir, you must have gritted your teeth when you wrote that. I think we know that progress is far too slow. We're not where we want to be, and there's an enormous amount of work to be done. Just looking again at this question of irregular expenditure, as we've seen, more than 45 billion has been identified as irregular expenditure. And of this amount, over 40 billion relates to non-compliance with supply chain management legislation, which the AG emphasized was a serious matter. And these include instances of prescribed procurement processes not being followed, suppliers' tax affairs not being in order, inadequate contract management, competitive bidding processes not being followed, and so on and so forth. Now, it seems to me that supply chain management is perhaps one of the greatest weaknesses in our public financial management framework. As has been pointed out, the Constitution and the Public Finance Management Act, which governs all of that, most of what we've been talking about here today, are quite clear on what a procurement framework that any organ of state should look like. It should be fair, equitable, transparent, competitive, and cost-effective. The problem is, though, that this framework has proved itself to be rather ineffective at the moment as a means for promoting fairness and transparency. In fact, it has turned out to be a prime mechanism for state capture. It is something that really needs to be brought under control, and soon, and I'm delighted to hear that the AG is making it a focus of attention. Let's just look quickly at the relative performance of provinces. As we've mentioned earlier, the AG report shows that the Western Cape and Gauteng are the best performance when measured by the number of departments getting clean audits. As I said, Western Cape had 11 clean audits and Gauteng had 7. Now, the AG's report states that, I'm going to quote, "Common in both provinces was the role of leadership in instilling a culture of accountability and expecting nothing less than sound administration. Members of the executive councils and provincial treasuries have a common goal of clean administration and, and under the leadership of the premiers are working systematically towards that goal in spite of facing similar challenges as other provinces." Now, I'd just like to contemplate for a moment why this should be so. I mean, after all, each provincial department has the same legislative framework and the same standards that it has to adhere to, and as the AG points out, all of them face similar problems. I think part of the reason could lie in the fact that Gauteng and Western Cape, being historically better resourced than other areas, have ready access to the necessary skills. But I'd like to suggest that another and perhaps equally important reason is that the governments in these provinces are or have been more exposed to political competition and understand better the need to be taking not only service delivery but governance issues extremely seriously. Just by contrast, the AG reports that in the Northwestern Free State, a lack of accountability and commitment towards clean administration was evident, and in Mpumalanga, Northern Cape and KwaZulu-Natal have shown erratic performance with improvements in 1 year being set off by regressions in the next. So provincial government, we also have a serious problem. Turning quickly to the issue of financial health, which the AG referred to, he reports that since 2013-14 financial year, there's been a regression in the overall financial health of departments. Measurements, as the AG pointed out, include levels of unauthorized expenditure, overspending on budget, uncertainty as to whether an institution is a going concern, revenue management, and creditor payments. In other words, creditors being paid on time. He reports that 46% of departments are reported to be in good financial health, but these 46% represent only 36% of departmental budgets. In other words, the vast bulk of the combined national and provincial budgets, that is to say 64% of these total budgets, is controlled by departments which are in bad financial health. Now, if that doesn't give you sleepless nights, I don't know what will. In any event, looking quickly at the 5 programs which the AG focused on, water infrastructure development, expanded public works program, school infrastructure, food security and agrarian reform, and housing finance. I was actually wondering why these particular programs were focused on, but I guess that it's all because they are to a greater or lesser extent subject or present the potential for project management failure on a massive scale, supply chain management irregularities, and perhaps even the dishing out of patronage. You mentioned the question of the expanded public works program, seeing people sitting on the side of the road doing nothing. It's well known, for example, in local government that this is how you cast about for getting votes. You dish out jobs to people in the hope that they'll vote for you. And we all know, for example, that as far as agrarian reform is concerned, the Free State is the land of, as they say, milk and money. This is where money which is intended for a dairy farm mysteriously ends up paying for the wedding of the century. These are the kind of things, I guess, that motivate examination of these particular projects. Now, the report states that the following are the main reasons for inadequate performance in these projects: poor planning, poor financial management, poor performance management, poor project management, inadequate monitoring, and lack of corrective actions to address project failures and supply chain management irregularities. Now, these are not just accounting or reporting issues. These are wide-ranging and deep-rooted management and governance issues. And we all have to wonder now, in the light of this, what is this doing for service delivery by government? And after all, that is what government is here for, is to provide service delivery. Now, if I may, and forgive me, Mills, I'd like to relate a little anecdote, if I can. We've been talking mostly about national and provincial audit, and my anecdote relates to local government, but the lessons to be learned are much the same. Some years ago, I was quite deeply involved in field work for research into local government, and of course financial governance was a major topic of this research, and I visited dozens of municipalities across the country. At one of them, I can't remember the name of it, it was somewhere in Mpumalanga, and I think it was next to the Kruger Park. I interviewed the chief financial officer, and she had a sad tale of woe to relate regarding the lack of suitably qualified people in a department. She told me that the sole qualification of one staff member in the finance department was a certificate in firefighting, and the sole qualification of another member, and this is a true story, of the finance staff was a degree in theology. Unsurprisingly, the books of the municipality were in something of a mess, and to add to the CFO's woes, the Auditor General was about to start work shortly on the annual audit of the municipality. Now, I felt that I should offer her some encouragement. I said, actually your staff are admirably qualified. When the Auditor General comes, you have someone who is better qualified than anyone else to put out fires. And if that doesn't work, you have someone that has a direct line to the man upstairs. Sadly, she found my advice neither helpful nor amusing. I don't know what the audit outcome was there. In any event, it does illustrate what the Auditor General refers to as one of the root causes of auditees' continuing inability to obtain better audit results. Instability or vacancies in key positions, or key officials lacking appropriate competencies. And at national and provincial level, this affects 54% of auditees, according to the report. I guess we also have to ask ourselves, are we as an unarguably less developed country simply lacking in the technocratic skills which are necessary to implement what is no doubt a best practice public financial management framework, but one which is exceedingly difficult and complex to implement? And it's often suggested that in the developing world we shouldn't be too concerned about having the best systems that money can buy. Imposing such systems places an intolerable strain on resources and is susceptible to total failure when those resources, as they are, suddenly disappear, for example, in the case of resignation. Now, I think these are just things that perhaps you should keep in mind and think about. Also, something which is particularly, I suppose, dear to my heart is, should perhaps not educational institutions take closer interest in providing proper first-class education for people who wish to become involved in public sector financial management. Forgive me for saying so. I mean, our accounting departments in universities pay obeisance to the god Psyche, and they focus their efforts mostly on producing CEOs who go off to earn their fortunes in the, what should we call them, the big three, or management students which go off to do their bit for redistribution in places like McKinsey. But there's very little being done at our universities at the moment to address specifically a major crisis facing our country. I'm very proud to say that UCT, we are one of the few institutions, I think 2 or 3 of the universities, which are actually doing something about it, but we can do a whole lot more. One of the other root causes identified by the Auditor General is that there are inadequate consequences for poor performance and transgressions, and this was something that was very, very clearly emphasized. And there's been a recurring theme over the years in the AG's consolidated reports and audit outcomes that despite institutions being informed of transgressions and despite them being urged to take action, they often don't take action at all in terms of the PFMA or the MFMA. In the report, which is at present under discussion, this contributed to poor audit outcomes at 39% of auditees that did not get clean audit results. And I suppose the question must be asked, if institutions themselves are not interested in taking remedial action, is it not time for the Auditor General to be given the power to enforce recommendations, as was suggested here? I'd be very interested to see what the outcome of the proposed amendment in Parliament is. Of course, it would be interesting also to look further at international examples of what can be done. But again, one has to be careful whether in South Africa an action like this might be a little bit politically sensitive. We'll see how it happens. The third root cause, and this is the most common root cause, is that management does not respond with the required urgency to the AG's messages about addressing risks and improving internal controls. And this is a problem, according to the report, at more than 80% of auditees. So it would appear that there's something, and forgive the dramatic language, I guess, a fog of inertia, a miasma of lassitude, and a mist of indifference which has settled over many government institutions. Anyway, just to wrap up, I think in the national and provincial spheres, the Public Finance Management Act is central to the Auditor General's work. This Act came into force 17 years ago, and according to Section 2 of the Act, the object of this Act is to secure transparency, accountability, and sound management of the revenue, expenditure, assets, and liabilities of the institutions to which this Act applies. Now, the latest consolidated audit report suggests that perhaps we're not quite there. The Auditor General mentions in the report is that as the electoral, and I'm quoting, as the electoral term of the current government moves into its last year, our message is aimed at the public accounts committees and portfolio committees who have very little time left to strengthen the legacy of accountability and impactful oversight. Now, juxtaposed with this was a comment by a rather unkind journalist who said that at the end of the days of this government revolve around even more audacious act of looting. Now, would we say that we're anywhere near the objectives and the aims which are enshrined in Section 2 of the PFMA? Can we look forward to strong accountability and impactful oversight, which is the clear desire of the AG, or can we look more just to more audacious looting? Let's hope there's cause for optimism, and in any event, even though many of us might not realize, as the going gets tougher, the role of the Auditor General in supporting constitutional democracy becomes ever more vital. So congratulations, sir, on a job well done in providing that support for these pillars of democracy. Thank you very much indeed.
Andrew, and thank you to the Auditor General. We'll now open the floor for questions and comments. We'll take a few rounds. Keep it nice and crisp. Anthony, should I start with you?
You normally don't.
Or should you wait? All right, okay. Keep it nice and short.
We're going to do 3 questions at a time and then give response.
Yeah.
And we're going to start, well, we start in the middle. Then I'm going to go to this side, and then I'll see you guys on that side.
First of all, thank you very much for a very good presentation. What my main concern is, in spite of all the good work that you're doing, perhaps you're looking at the wrong sectors. The main problem in this country seems to be the SOEs, state enterprises. That's where the money is being lost. SAA is losing 10 billion. Eskom is losing, almost broke. SABC is losing money. And we have corruption, we have state capture, we are in junk status, and where are we going wrong? It seems like we're just shuffling the chairs on the sort of Titanic while we're hitting an iceberg. What can be done more, looking at the big picture, to improve the situation in South Africa? Thank you.
Anybody else from this middle section?
Thank you for the presentation. Just a question in terms of addressing the issues that are being raised here. Technology is bracing and bringing with it many potential opportunities. I just wonder what your comments were and whether you're looking into distributed ledger technology, blockchain, stuff like that, to address these challenges.
Anybody else here? I'm going to go over to this side. One more question from this division.
At the back there.
My question is very simple. Is the situation getting better or is it getting worse? And besides the issue of skills, what more is lacking in the system?
All right, shall we take the responses? AG?
Let me start with the question on the state-owned entities. If you look at the issues that we are reporting on departments, there are also public entities included here. Some of them are audited by us in the office. Some of them are audited outside of the office. And a lot of them have come back with a dismal outcome as far as their performance is concerned on financial management issues. There's a couple of them that we have cited, like the likes of SABC that we have mentioned, is part of this analysis. The accounts of South African Airways have not yet been finalized because of the recent changes in the board, but their outcomes in the previous year have not been good either. So you're quite right. I think the state-owned entities are the entities that a large number of the infrastructure delivery projects were targeted at. And if their performance is as dismal as we know it, it's clear that some of the stuff that they need to be driving state-owned entities is also falling apart. So I agree that the focus in our report is not just on departments only, but state-owned entities are included in the package. You can see some of the financial health risks pertaining to state-owned entities as an isolated group in relation to the departments. But also in the departments, if you look deeper also in these audit outcomes, you'll find that those big departments like education, like health, and public works, among others, they also are in serious trouble when it comes to the issues of financial management, because those are the critical departments that are about delivering the issues of education, health, and infrastructure. Coupled with state-owned entities, you still have a very lousy picture as far as their performance is concerned. What needs to be done with them? Well, in our case, in the audit office, we certainly have limited capacity to come up with those suggestions, because they go much beyond the minimum levels of our mandate. But it appears to me that indeed the level of attention that needs to be given to this is largely in state-owned entities. It's not only in their operational environment, but it's also in their governance. The people that get attracted to sit on the boards of those entities and all that. And I think there's a huge issue that needs to be dealt with as far as state-owned entities. It reminds me a call that was made some couple of years ago by the late Professor James Hevel, if you remember, when he was the chair of the board at South African Airways. And one of the points when he was dealing with the crisis at the time at SAA, he made a suggestion that at some point, all of the affected parties would need to come together and examine the relationships between accounting authorities, executive authorities, accounting officers, and those type of structures, including your boards of these state-owned entities, to begin to engage on the interfaces, the interrelationships between them. Because I think what gets broken down is that the guy who is the chief executive officer sometimes gets dictated by people who are supposed to be providing oversight and governance in the entity. As far as the technology is concerned, I think when we look at the information technology environment as part of our test of the disciplines in the information technology, we're still battling with basic disciplines. If you recall, National Treasury was tasked when there was that report that came up with the integrated financial management system. The development of that system itself, in terms of its life cycle, was a problem, as evidenced by the report that was released. Now, if you're going to talk about blockchain technology and other stuff, it's probably going to be a tough call to make some clear decisions there, because here you're battling with things like the general computer control environment is so weak that it allows a person to get into many systems that they do not have normal access routines, and they end up performing incompatible functions and start diverting monies. Now, if you bring those complex systems into this environment while they are be a big challenge. I didn't get the last question. What was the last question? Oh, is the situation getting better? Is it? Oh, okay. No, the situation is not getting better. Is that clear? The situation is not getting better in that, for as long as in an environment where you need to promote certain disciplines, for as long as nothing happens to the people who divert from those disciplines, the situation can never be described to be getting better. You might be getting others that are making forward progress as they should. But if you look at the overall picture, when people ignore basic systems of internal control, if you are given a budget of 120 million to deliver a particular project, and you decide that you can exceed that budget by whatever amount because the fiscus will absorb, you can't describe that situation as getting better, especially when people continuously divert from acknowledging and embracing the disciplines of control that will protect the resources. So the answer is the situation is unfortunately not getting better.
All right, shall we take further questions? You wanted to comment, Andrew, on any of these questions?
I can't add much about IT, and I think the AG said everything that needs to be said about the state-owned enterprises. But just as to whether the situation is getting better or not, yeah, I think that is the sad reality of it. You mentioned in the report that the number of auditees getting absolutely clean reports is increasing slightly. But at the same time, the number at the lower end of the scale, in other words, the disclaimers, the adverse, and the qualified reports, are also getting bigger. It's the little man in the middle who's getting squeezed a little bit. In other words, the unqualified with matters outcomes getting smaller, but below you get an increasing number of unfavorable audit outcomes as well. So yeah, I think that's the inescapable conclusion at the end of the day.
All right, thank you. Let's take more questions. This side. This gentleman there.
Yes, my name is Begazela. I work for the Business Day newspaper. Just two questions on my side. In terms of what you're saying, like if the proposed legislation is changed and you're given more teeth, in a sense, do you think that will be the ultimate solution? I mean, you look at various municipalities, they rely so much on consultants. I tend to think that it's perhaps an issue of shortage of skills. That's why we are seeing a lot of poor audit outcomes. Just want to get your thoughts on that. And then another issue related to this is the proposed audit rotation. Do you think that will help also to improve the audit outcomes going forward?
All right.
One more question
One
on
more
this
question
side?
that side.
Okay, I'm coming across to you just now.
Thank you. I would just like to ask, with regard to your office, is it adequately resourced? Is the training adequate? And do you have misgivings about the future in that regard?
To you, AG.
No, thank you very much. Is there another question? Shall I carry on?
Go ahead.
Oh. Yeah. Let me deal with the resourcing of the office. Thanks for that question, Doug. We are an office across the whole country, spread across all 9 provinces, including the head office in Pretoria. There are about 3,500 odd of us. Among those 3,500 people, there are about 720 chartered accountants SA. CASA, 720, under one roof, Auditor General South Africa. Young and old, very many years of experience among them. There's about 89 information systems technology auditors qualified in that stream of work. And there are also many other disciplines that many of them have signed up to. Now, of all the institutions I know, I don't know if there are many that have got about 700 chartered accountants in one roof, under one roof. And all of those people qualified outside of the office. Many of them are qualifying through the office. That number, in fact, of additional, last year we were about 650. In 1 year, we managed to put in, without getting them from outside, but training them through the system, we managed to get another 70 or close to 100 in 1 year. So we do have people with the necessary technical capability to understand and interpret the stuff and the risks that they confront on an ongoing basis. And we also have them in large numbers who are able to respond to those risks, to the work that we do as part of our discipline in the audit office. Many of them have also had many experiences internationally. We were auditors to the United Nations for 12 years as the South African Audit Office. We reported on the accounts of the General Assembly and the Secretary General's accounts, including peacekeeping mission accounts across many parts of the world. as well as the World Health Organization. We were also auditors to them, and UNIDO, the United Nations Industrial Development Organization, many others. Currently, we do the audit of the African Union, South African Customs Union, and SADC. So we've got that international experience in the Public Audit Office, which is priceless. Some of our teams, when we were involved in the audit office, in the audit of the UN, would go spend weeks in Manhattan at the pension fund of the United Nations, auditing that pension fund and giving reports to the Secretary General on issues of the fund and that. So there are many people there who through training and the discipline of the audit office have been able to also, because we don't keep them, we can't keep them, the economics of the trade won't support it. Otherwise we'll have a huge bottleneck of people who do not have work to do. So they also get out. The ones that I'm mentioning are the ones that we have, but there are many that have left over the years after they finished their training contract and joined government, and some of them joined the private sector. So we are also not just in terms of the trainee accountants across the office. At any one time, we've got in the different first, second, and third year training, we've got somewhere about 1,300 at any one time of those people who are going through that training program, supervised by managers, senior managers, and other directors who are responsible for the different portfolios. So there's huge talent there. The audit rotation, would it improve audit outcomes? The people who have got a primary responsibility for preparing financial statements is management. So management must improve audit outcomes, not audit rotation. Audit rotation is addressing other issues in terms of access to work, in terms of managing the familiarity risks that come with someone who is too involved in one place for too long. But the improvement in the audit outcomes is about the machinery that is in the institution that makes sure that the transactions that are entered into are. And if they do so, the auditors will come and audit, and that audit will result in an audit outcome, whatever it is. But the ones who are responsible for improving it is management of the entity. So that when the rotation comes, it is about addressing the audit profession itself. To say that you've been here too long, you're probably too familiar, even you know the names of the chairs and the desks in this institution, you probably need to change around and get somebody else. The Public Audit Act, is it going to substantially, I'm rephrasing, is it going to substantially address all your problems? No, no, no. It is rather a step in the right direction to narrow the space for the unchecked abuse, if you like. But the bottom line is that the auditors are not the elected people, if you look at the public system, how it operates. They are people that are employed to perform a particular task. Even if we have this amendment, we do not have the authority to insist that thou shall. We can't. We are just an instrument and a mechanism for driving oversight, transparency, and accountability. And so this power is an attempt to try and narrow the space for people to ignore the counsel that comes with the audit. Ultimately, when the law is in place, somebody who's going to make the final decision must sit at the chamber in Plain Street and make that decision, not the auditor. We're just wanting to find a mechanism where we can say, if somebody asks us the following year, you keep reporting this irregular expenditure, you're starting to sound like a broken record, as if there's something wrong with a broken record, Mills. When you play a broken record, you can always skip that song and play the next one, because it does it itself in a broken record. So the issue here is that I like the comment that was attributed to the editorial of the Business Day last week on Tuesday. And they ran an editorial on the subject of the amendment of the Public Audit Act. And the editor was saying this is a small amendment with a potentially huge impact. That I thought captures the essence of what this is about. Making just a little tweak, but it might have a huge impact. Because if somebody knows up front that the regime is such that now if there is irregular expenditure that has been identified in an audit, it is going to be followed through without my involvement. Because the auditors are going to sit alone and start searching into the records and the evidence and starting to identify those instances that must be handed over. You're going to be in trouble when that report comes back. That you must know. Whereas now, it depends on whether the people you report to have an appetite to take it further. And the evidence of the past years is that that appetite has not been there. That's what this amendment could possibly do. It will not have those powers to effect the change in somebody's circumstances because we are not elected.
All right, we'll take the last set of questions, over that side. All right, keep them short, please.
The balance are public entities. Of those public entities, arms corps, they're all small. If you were to weight the auditees in those bar charts according to budget or turnover, what do you think the percentages of green block would be? It's currently 30-something, 30%, but it seems to me that most of them are those with small budgets or small turnover. What would the percentage be if you were to do that bar chart, not in the number of auditees, but in terms of the budget of each department or each entity?
Right, take the next one.
There was somebody on the side.
Thank you very much, Auditor General, for your presentation. My issue is on the consequence management, especially for the irregular expenditure. And you have made a comment about the recommendations that the referrals to the investigation units, investigative bodies, including SIUs. But those institutions, they've got the backlog on their own. You know, I know SIUs, they've got issues of their own. And will it not be adding burden on them in terms of the investigations? And if it's going to be done by private investigation bodies, is it not going to be a cost, an additional cost to the state? And yeah. And another one is also a comment on.
But can we please keep it short?
Okay.
We're running out of time.
Okay.
Can I take a question? Sorry, ma'am. Let me just take a question. I think that is enough because I want to give other people a chance. We're running out of time. Let's take another question, please.
Thanks, AG, for your presentation. Just a quick one from my side. You know, the question of skills and ensuring that there's capacity at all levels of state to do the work that needs to be done in terms of financial management. How best will that, be addressed? How are you going to be able to attract, the adequate skills in the rural-based municipalities and that type of thing? Is it a case of us having too big a state? We need to perhaps consolidate further so that we can ensure that there's adequate skills within the public sector in this space. Thanks.
All right, next one.
Thank you. At the level of individuals, do you have a sense of the extent to which your staff or the staff in the entities being audited are intimidated into not fixing things or doing things right? And how can you enable and support and protect people who want to do the right thing but fear doing so?
Okay, I think that's... any other further questions? Okay, the last two here. This gentleman has been, last two, and that's it. And then we're going to conclude.
I'm taking guidance from Bill, so it's
right.
his fault.
That gentleman's hand has been up for a while. And
It's a small question, Auditor General, and to your respondent. You might have said this already, maybe I just didn't see it or I didn't hear it. Green please speak about the irregular expenditure, mainly referring to bureaucrats/politicians. I didn't hear or see you saying anything about the role of the public in this whole thing, Joe Public.
All right. Last one, sir. And that's it. That's one.
Yep. Thank you, Chair. So, in this country, we have a huge problem that we sometimes just don't know what is going on. The other people ask questions that we think are critical and are important, and the other person will say, it's a meanderings, it's not real questions. And so we appreciate the role of the Auditor General so much because we know you are independent. When we look at these bar graphs and charts, we know that they are correct and fact. Now, you asking for more teeth, and you mentioned you mentioned 2 investigations, and the surcharges that you're thinking about. And the third one, I think it was other. But my worry is that how are you making sure that you remain independent? That because we really rely on you, we just need you to make sure that you remain independent and not part of the system. Thank you.
All right, thank you. Over to you, AG, and then we'll conclude.
After you.
Huh? Let's start with the component of the budget. I just don't have the number at the top of my head, but it's a tiny number. It's not more than 30%. The budget, those that have achieved clean audit, that they represent, is not more than 30%. I don't know exactly the figure, but it's never exceeded 30%. So which means the bulk of the budget is spent below that green line. Consequences for irregular expenditure, investigations, and so on. Well, let's look at the issue of, obviously the system is clogged up now, as you say. There are problems at very many investigative agencies. And if you were to take it to the private sector, you'll pay. What we think, and we've asked for the appropriation as well as part of this amendment, so that there can be ring-fenced funding that will be under our control directly, that we will use to procure those services that we want to procure for investigation. The way we've looked at it was that the benefit that would be realized if those investigations are done thoroughly far exceed the cost in terms of the amount that you'll pay for them, even if you haven't done one yet. Just the fact that you know in the group of the people that would potentially have subjected issues into incorrect management of supply chain, many of them will be dissuaded from carrying on doing it that way, especially when they know that at some point they may be required to put their own hand in their own pocket when the debit surcharge is confronting you now. So we think that there will certainly be some benefits, significant benefits. Because also, if this investigation is controlled through the people that were doing the audit, the chances are that you're not going to commit huge resources to the investigator, because the investigator is also going to rely on briefings from the audit team about the areas that are potentially at risk of financial loss based on the exercise that they've done during the audit. So it's not somebody who's going to walk in cold without knowing what are the issues or the risks that need to be addressed. So there will be some level of control of the cost, but we believe that the resulting benefit that will arise in ensuring that what the fiscus had traditionally been losing suddenly comes back to be used in the fiscus. So we know about the bottleneck, and we are setting up internally, once this thing is processed, to have a mechanism to manage the procurement of those investigation services. So hopefully it won't be too costly. I don't think it will be. But let's look at what it will save, these billions. If these billions are saved and they end up where they ought to have gone, if we spend 2 million rands doing that investigation, all the better. Intimidation for not fixing things. Some of our guys have experienced it in a number of places where they, they get told funny things, and sometimes there was an instance in Gauteng, and I'm sure you've read about it, where someone was wanting them to change their conclusions. And then they stood up and they raised their hand and they blew the whistle. the stuff that we know auditors ought to be made of, you know? And those people that did that faced the music right through the chain because Gauteng took it very seriously. So we encourage our people to do what auditors do, and auditors are normally chasing things to happen transparently, and they also like disclosure. So we encourage them not only to focus on disclosure of financial statements, but also to bring forth these instances where they get intimidated. And we report them to the people in charge and so on. So it is a risk, obviously, for them, but we know sometimes when you pick up something and you say, I've got this transaction, can we go see where is this project? And then some of them, they get intimidated now when they're asking those deeper questions because they're not interested in the movement of the money in the books. They also want to see that thing that is represented by this debit in the books. So it does attract intimidation, unfortunately, but we try and manage the risk around that. How do you remain independent? You know, if I get a call, as an example, if I speak just for myself, I know that if someone says, hey, I've got a problem with your team, there are many ways to address that particular problem when they've got a problem with the team, because sometimes they think that they're going to persuade you to go change whatever conclusion of the team. Because we've got people who've got their own professional integrity to protect in the office, and we are a team. Every team in the audit is allowed to make the conclusion about that audit, because the standards suggest to us that I can come as an AG to a team in the Northwest and say to them the audit opinion shall be this. Because I was not involved in the planning, the execution, and the evaluation of that evidence throughout that audit. I can't be the one who proposes the opinion. So from that point of view, we've got that internal protection in a way. Again, the risk that you run if you are going to allow your scope of work to be determined by somebody else, you might be chasing some other people's things. In our case, all our audits, and we insist that it be so, the final word on the scope of work, the extent of procedures to be performed, is exclusively in the hands of our teams. We rely on the fact that when we say they must adhere to the code of professional conduct, they do exactly that, among others. So we're not in control of all of the things, but the things that will safeguard independence and professional competence, we jealously guard those ones. And the way that we work, I can never come, even if I thought the team was wrong, I must always leave it in the hands of the team to decide what is the best possible outcome of that audit, because they are the ones who interact with management, they are the ones who assess also the verbal information that they get, including the documentary evidence. So from that point of view, I think we have set up a discipline over the years where it doesn't matter who it is, they can't come to anyone else who is not part of that team. We can create an environment for a conversation to happen between the auditor and the auditee, but the decision is the audit teams. They know that. Because the risk is that if someone comes from somewhere else and think that they are going to dictate, then we've lost the plot. There are many other issues, which weigh in on independence, and I'm sure we can have a debate about them. And I know the people in the room here who have also practiced as auditors know that between the reality and the perception of independence, there's a ground that needs to be covered. It's about you, the person. What is your appreciation of the role that you play in the context of having to give independent conclusions to so many constituencies of people who have got a different need for this information? You'll probably realize when you step away from independence that you are robbing many people of stuff that they themselves cannot do by themselves. So that's what we try and preach, and we hope that people respond positively when they hear us say that. Skills and the skills. SAICA is respond to this, but I think the South African Institute of Chartered Accountants, for example, took a program where they sent retired chartered accountants to a number of municipalities, including Gauteng, where they got them to provide some support to the people who were in those roles who were struggling to do what was needed, but it's an ongoing effort. It also translated into the offering from within SAICA to allow people to qualify in the area of local government accounting as other initiatives. So it's an ongoing effort, but we, as an audit office, are not fully in control of how that one comes. Then the role of the public. I guess for us, we have an outreach program as an audit office, but the one instrument that we have been using thus far has been via the media engagements, because when the media has been trained through our efforts, they become a good medium to communicate with the public. But we are busy looking at this area in terms of engaging with citizens, because we believe that if the citizens understand at a basic level what we are talking about, not this unqualified with findings kind of language, because they really wouldn't appreciate what it is. But we are busy investigating with other agencies, including the International Budget Office, to look at mechanisms to engage also with the public and the citizens on this matter, because that is we believe that is possibly the long-term protection that we can get from this. If people understand this and they see a particular project in their village and they know they are allowed to ask the question, or if the municipality comes to them to come and discuss the IDP and say there will be a bridge here which has been budgeted for in the IDP, then if the citizens of that area know and they don't see the bridge, despite the IDP meeting that happened, they just need to be informed that there's a bridge that's coming within the next 12 months, and if it's not there, you must know that this is why it is not there. And so that part of the journey, of course, we cannot carry it out ourselves as an audit office. We partner with others who are schooled in that area, but it's a significant part of the equation.
All right. Andrew, just yes, and then we can
sure. Just on the question of independence, I mean, as you know, the Auditor General is a Chapter 9 institution. It's constitutionally protected. It's responsible only to Parliament. That isn't obviously an absolute guarantee. It really depends, I suppose, on the cultural attitude within the institution and its determination to ensure its independence. And I think we all know that is the AG has a remarkable record in that regard. As far as skills are concerned, I mentioned earlier, that some universities are starting to get on board and doing their best to produce a core of skilled, dedicated professionals who can go out there and take over, or at least promote good financial governance in these various institutions. But what you also got to remember, it's easy to say, okay, you've got to put skills out there, but the public sector is an extraordinarily tough environment. It really is. I don't think most people who work in the private sector have any idea how tough it can be. Not only your physical conditions, your geographical situation when you're stuck in somewhere out in the middle of nowhere, but the political environment is extraordinarily tough and draining and exhausting, and it takes a special kind of person with guts and a thick skin to stand up to it. And those are the kind of people we need. And again, I don't wish to flatter you unduly, sir, but I think you've got them there. And just finally, as far as Joe Public is concerned, one thing that worries me enormously is, whilst the AG does fantastic work in promoting accountability and transparency, I fear that Joe Public has become almost fatigued with the series of, how should I say, governance mishaps that have occurred of late. It's almost as if, here we go again, so what, I've kind of lost interest. So I think, even though we have fantastic institutions like the AG, a lot depends on the public remaining interested, taking a stand, and speaking out. Again, I think we tend to forget just how important the role of politics is in everything that we do here. It's one thing to have fantastic world-class Rolls-Royce systems, but if there's not the political will to make them work, nothing is going to happen. We understand that politics is a game which, if properly played, can be invigorating, it can be progressive, but if badly played, it's debilitating, and that is a trap that we have to avoid falling into. And again, I think we can do it, but it's going to take a lot of effort, not only on part of the AG, but on citizens as well. Thank you.
All right, thank you very much. That's how we come to the conclusion of our Distinguished Speakers Program tonight. I would like to thank the Auditor General, Mr. Kimi Makwetu, and you brought your team here, by the way, taking the time to come here and spend almost 2 hours with us, sharing the work, excellent work that you're doing with us. You're a great public servant, and we really appreciate what you do. Continue doing that. It's fantastic work. And as Andrew says, you work in a very difficult political environment. And the way you have progressed in your career with your team, it's been exemplary and extremely, extremely impressive. Thank you very much, Say. It's been a great presentation. And Andrew, thank you for your thoughtful response to the presentation and for your contribution. We really appreciate it. And I'd like to thank everyone who took the trouble to come here tonight. It's a full house. That just attests to the importance of the issues that are being raised and how we feel as the public about state finances and how they're being managed. Thank you very much. And I want to offer you a small token of appreciation. Sir, thank you very much. Thank you. And you, Andrew.
Thank you.
And I'm now going to invite a colleague from the Auditor General's office to say a few words of thanks. This is a joint effort. This is a joint mission. So over to who's speaking.
Yes, just before she comes up, let me just quickly say a few words, because when she goes, that's the end of it. Please, you're all welcome to join us for some refreshments. You go through that door on my right. Please join us, and you'll be able to have further conversations. And we just want to make sure that you drive home safely. I now hand over to Sharon Adams, Regional Business Executive for the Western Cape for the AG's office.
Honourable guests, ladies and gentlemen, it's really an honour for me to do the vote of thanks tonight. So first of all, I would like to thank our Auditor General, Kimi Makwetu, for sharing those insights on the general report for 16-17 with us. We could feel his passion as he was talking and sharing those insights with us. And I really think as an audience, we are better educated on the general report. To Professor Molsoko, thank you so much for making sure the event happened, because you were instrumental in organizing this event, and we really want to thank you as an HSA office.
Thank you.
To Dr. Andrew Saddle, he shared some great insights with us in a very humoristic way. And I think I thoroughly enjoyed his insight of the general report and how we analyze it. So thank you so much for your insights into the general report. This event, as you can see, was a great success, and we would like to thank Pamela Court, who's the head of events, the lady in the red dress, and she made sure everything went smoothly with the team. So we thank you so much for making sure this event was a success. To our audience here today, if you weren't present here today, I'm sure this event wouldn't have been successful. And thank you so much for taking the time out to spend with us and analyzing the audit outcomes, talking about the public sector and those key things that has an impact on our country. To the media, also thank you for your presence here, for taking the time out to come and listen to the messages. To the AGS communication team and also to the Western Cape team, thank you so much for your support and assistance and making sure the event was successful. Now, just lastly, in closing, on each seat, there's a questionnaire, basically, a very short questionnaire, where we as an AGSA office just would like to get feedback. So I'll just ask everybody just to take a minute just to complete that questionnaire and just leave it on your seats when you are done, and we will collect it. Thank you so much for this wonderful evening.
Thank you. Join us for refreshments.